Hi, everyone. Todd Rosenbluth of TMX VettaFi, and thanks for joining us. What you're going to watch in a moment is a clip from a virtual event we at VettaFi recently hosted. I'm so excited for you to get a taste of it. To capture and enjoy the full event, you'll see the link in the description. We encourage you to register and watch that. We also would love for you to take part in our other virtual events, so visit etftrends.com. I'll see you soon. Welcome to VettaFi Voices. We're going to unpack the latest ETF trends. I'm Todd Rosenbluth from TMX VettaFi. You already see my colleagues on screen. I've got joined with me Cinthia Murphy, our investment strategist. Good morning to you, Cinthia. How are you?
Hey, Todd. I'm great. I'm excited to be here and doing this today with the team.
Excited to be here with you as well. And Roxanna Islam, our head of sector and industry research. Good morning to you.
Good morning, Todd. Glad to be here too.
Happy to have you both here. And we're going to spend roughly 30 minutes together talking about what we're seeing at TMX VettaFi in the ETF universe and landscape. Last year was a good year for active ETFs. This year could be even better. And it's certainly been a great time for folks that have been embracing actively managed ETFs. We showed where the audience thought the money, or where their money had been going, but here's where the overall industry-wide money has been flowing into. You can see disproportionately towards equities. Fixed income, that's roughly 30% if you're just trying to figure out what that pie or that slice of the pie is. Fixed income ETFs is just north of 20% of overall ETF assets, I believe. So fixed income ETFs have been more popular this year, and certainly more popular than our audience has been saying of them increasing their exposure to fixed income over other asset classes. And you can see alternatives and other in here. And Roxana, since you put together the chart, I just want to confirm Bitcoin ETFs, that's in this alternatives bucket, right?
Yes, it is.
Okay, so this is crypto, this is gold, this is other commodities, lots of other things. This is still a healthy weighting towards alternative assets in terms of the flows. So we're seeing diversification becoming more popular overall. So one other slide that I have, and then I'll bring my colleagues even more further into this conversation. Top 10 lists always work and are nice and easy to be able to show in a presentation. This happens to be ETFs that all have, at the time we pulled the data, north of $10 billion of net inflows for the year. There's some other ETFs that are just south of that $10 billion mark. What jumps out to me is a number of things, but let me start one thing and then I'll make sure there's room for a conversation, is that Vanguard 500 VU, which became the largest ETF this year, it crossed the threshold and passed SPY, the State Street product, tied to the S&P 500. It's on pace to again break $100 billion as it did in 2024, with a lot of room to go. That was a record that we saw in 2024 for an individual ETF. It's on pace to be able to cross that threshold, $100 billion again. It is leading that race. But even if it was leading that race, there's lots of money going into other ETFs. So Roxana, let me come to you, ask you to have something that jumps off the screen to you.
Yeah, a couple of things here. I mean, we talked about active versus passive, and you're looking at the top 10 year-to-date net inflows look like they're all passive funds. So that's sort of notable. And then I would say is also notable. I mean, you have that just launched January of last year, and it's already gathered a significant amount of assets, and you have it up there, number 5, up there with some of those broader core equity ETFs. So it's a very impressive sort of milestone for these Bitcoin ETFs.
I would agree. Cinthia, what are the things that jump out to you on this list?
I'll add 2 things. One is I think it's fascinating that the top 2 is, hey, large cap equity risk and as close to cash-like as you get other than a money market fund. So it's an interesting dichotomy between risk appetite and protection. I also like to see, when you see VOO there, you also see SPLG from State Street, you see QQQM from Invesco, which are, the cheaper, more core portfolio holdings versus SPY versus QQQ, which are trader favorites. These tend to be retail favorites because they are lower cost. It's the same exposure, but a lower cost. We call them the mini ETFs, or lower share price, easier access, entry point. It tells you that this isn't big institutional money necessarily. This isn't a retail trading crowd. The trading crowd trying to make plays here. This is sticky assets. It's folks building portfolios with the lowest cost, building blocks they can find. I like to see that. So with that, Todd, I'll give it back to you.
So our goal for this was during the summer to help get people up to speed on what we're excited about in the ETF industry. As you're coming back to school in September, for many cases, if you're a parent, or I guess if you're a child that's listening to this as well, thank you for doing so on your summer vacation. We wanted to get you up to speed. If you're an advisor and there's ways we can help you, please continue to come to our virtual events, read our content that's through the Expert Insights page. I did see that we have a couple of folks that are from asset managers. If there's ways that we can help you from an educational standpoint, please reach out. We'd love to be able to help you tell your story. Roxanna, Cinthia, anything you want to add before we say thank you?
I think that would, go ahead, Cinthia.
No, I was just gonna say, yeah, thanks again. There's so many trends, so many things to cover. It's been a really busy year full of different forces driving markets. These are some of the highlights. But we love feedback. So if there's something you're watching closely, shoot us a note. We're easy to find. We'd love to engage with you guys.
I failed, Roxanna, to actually hand the ball directly to the person. So let me give you the final word.
No, it's okay. I was just going to add, we have about a little over 3 months left in the year. But in the ETF world, that's a lot of time. So we could potentially see a lot of new exciting things happen for the rest of the year that we didn't even touch on. So I'm looking forward to finding out what's happening next.
So am I, looking forward to doing it with the two of you. Folks, if you haven't filled out the survey, that's one of the things that you'll see on the platform. We'd love your feedback. Have a great rest of the day.
Bye, everyone.